guys, Omar Khan here from Theta Trading, and today I wanted to talk to you about Microsoft's second quarter earnings. But before we do that, I was wondering if you could give us a like. It really helps that YouTube algorithm out. And please consider subscribing to the channel if you find the content to be valuable. All right, now let's get on to Q2 earnings and why it actually matters. Well, the reason it matters is because 4 times a year, most publicly traded companies have to disclose how much money they made, okay? Now, in the short run, the stock market is like a popularity contest. It can go up or down for any particular reason. Could be whatever. Inflation, interest rates, too high unemployment, too low unemployment, wars, geopolitical events, pandemics, all kinds of things can happen in the short run. However, in the long run, it is a weighing machine. And that weighing machine is based upon the amount of money a company makes or doesn't make. So even if you don't invest in Microsoft, you want to go through the same process every single time when evaluating a company that you want to invest in. Now, for us, we do invest in Microsoft, but that's something you have to look into yourself. And then let's take a look at earnings. Now, why did earnings missed? So earnings missed on the top line. That means the gross amount of revenue, and they missed on the bottom line, the net amount of profit made. Now, generally speaking, that doesn't sound like a good scenario. However, what we have to consider in the environment that we're in is expectations. So what Wall Street does is they price a stock not just based upon how it did, but based upon how it did versus what the expectations of the eggheads on Wall Street were saying it would do, okay? And then the second part of that is they have an earnings call right after they release how much the report card. So think about it. Your kid comes home, gives you the report card, says, hey, I got, this mark and this subject and blah, blah, blah. And then you look at it and you say, okay, now let's have a chat. So the earnings call is like having a chat afterwards. They talk about, okay, this is what we did. This is why we did it. And then this is how we expect to do going forward. This plays a lot into the stock's movement in terms of price, okay? So let's dive into Microsoft earnings, okay? So Microsoft misses estimates, but stock up 5% on rosy guidance. So that's what I wanted to talk to you about again. Now they issued rosy guidance, meaning things are not as bad as they seem. So what happens is Microsoft was trading at $348. It went all the way down to about $250 a share. That's a big haircut. So a lot of the worst case stuff was already priced in. So even though they missed estimates, the stock still went up after hours. Stock was trading at about 265. It is because of this rosy guidance. Now, okay, let's take a look at some of the stuff. And I'm not going to get too deep into this. I just want to show you what the basic things you want to look at is this company run by a good team? For us, that's a check. Do they have various lines of business? For Microsoft, that's a check. Are they geographically diversified? These are all checks for Microsoft. So now let's get into the different businesses that Microsoft is in, okay? So what we're really looking at for this is their Azure or cloud computing division. And the reason that's so important is because cloud computing is becoming larger and larger and larger. Basically, it's information that is housed on a remote location. And basically, if you're using anything on the internet, that information all has to be backed up. So the more time that people spend on the internet, the more cloud services that will be required. Think about Netflix as an example, okay? So Microsoft revenue and income fell short, as did the company's revenue from Azure, and that is their cloud division and other cloud service, okay? Another thing that was challenging for them is changing exchange rates and challenges in advertising, and the PC markets brought down revenue in the quarter, okay? So the US dollar has been strong. So when they're making money in a foreign currency, that money has to be brought back in US dollars. Now, if the US dollar is strong, they're not able to bring back as much of the other, it's going to cost them more. So this is going to impact their earnings, and that has, and they've said that. Okay, now that's not going to be hopefully a long-term material impact. What we're going to look for is, what did they do, okay? Now, the company did $2.23 per share in adjusted earnings versus $2.29 per share as expected by analysts, okay? Now that is the key, expected by analysts. So you're thinking, wait a second, they didn't do as well as analysts thought. The stock should theoretically go down. Okay, so that is the bottom line, okay? So when you hear that bottom line and top line, that's exactly what that means. Now revenue, that is your top line. They did $51.87 billion this quarter versus $52.44 billion. That was, again, below analyst expectations. Now you're thinking the stock should react negatively. Now, just to paint a picture for you, the stock was trading about 250. As soon as this news came out, it went down to about 243, 244. And then as soon as they had their earnings call, that talk with your kids after the report card, That was where the rosy guidance was issued. They said things are looking pretty good going forward. And that's why we're seeing the stock up to about 263, 264, because the stock market prices in today what it thinks is going to happen in the future, okay? So Microsoft turned in their slowest revenue growth since 2020 at 12% over a year in the quarter, okay? So that is not a huge amount of growth, but a lot of the growth was brought forward during the pandemic. Think of us all who had to go online, the cloud business increase, playing video games, doing all kinds of stuff, spending more time on Microsoft Teams, for example. This is all stuff that was during the pandemic, but is not being done as much now, okay? Now, the company's earnings per share fell short of consensus for the first time since 2016, with it net income rising just 2% to 16.74 billion. So they are still making a whack load of money. However, this is a challenging environment, and their stock has been punished as a result. Now, with respect to guidance, which matters, okay, they said that they're going to call for 49.25 to 50.25 billion in the first fiscal quarter revenue. That's next month, okay, next quarter. And they're saying that range should be about 49.75. That's a 10% revenue growth. So you want to look at that revenue growth, okay? Reflecting worsening PC sales and slower cloud infrastructure growth, okay? We talked about that. Now, the company's implied gross margins, another thing we want to look at, is 69.85%. Think about it. They're almost making 70% of everything they sell. They still have expenses after that, but that is a huge amount of margin. That was wider than analysts expected, okay? So a lot of how stocks react, again, is based upon what the analysts think. If analysts have something pegged very low and that company does a lot better, that is a major opportunity. That's why it's a great idea to understand these companies, so that if you are going to invest in them, you understand them inside out. You should always invest in companies that you thoroughly understand. If you do not understand them, do not invest in them. And that's my advice to anyone. Now, it continues on to say, we continue to expect double-digit revenue growth, operating income, and constant currency in US dollars. So they are expecting good growth going forward. And I want to just point to this one line, and we're going to take a look at a couple of things. The one thing we've been looking at is Azure. That is their cloud computing. Now, that grew by only 40% compared to 46% the previous quarter. And analysts had expected 43.1%. So that, again, was below what they expected. But the reason the stock rallied is because what Satya Nadella, the CEO, said during the earnings calls. We are seeing larger and longer term commitments and a record number of 100 million plus and 1 billion plus deals this quarter. So what he's saying is, yeah, we didn't do the best last quarter. You know, I got a C plus or B minus or something like that, but I think I'm going to get an A because of this. Okay, that's what he's saying here. Okay, so now here are the different divisions of their business, and this is what you really want to look at. How much are they growing? I'm not going to get into the financial statements today too much. If you want to look at financial statements, I implore you to look at their website under investor relations, and you'll see it. Now you can see this is one that we're really looking for. Their cloud computing. You can see, look at the growth rate. Wow, that's quarter over quarter over quarter. That is phenomenal. And that is expected to be something that grows a lot more into the future. Now we can look at things like dynamic products and cloud services. Again, huge growth. Office 365 commercial, huge growth, but nowhere near as much as the cloud computing. Now, Office commercial products, okay, you can see it's a nice steady growth, okay. Office consumer products, nice steady growth. Again, that's Microsoft and all the other stuff that you use. Search, this is one that it doesn't do really well for them. Bing, Bing is not a huge one, but LinkedIn is, okay. So you're starting to see some growth there, but this is not their driver. The driver that I really want to point you guys to is this is what you want to be looking at. And this is what is really going to drive their growth and profit in the future, okay? Now, servers, products, and cloud services. Again, this is an area that's growing for them very nicely. Windows, okay? Windows commercial products and cloud services, again, growing very nicely, between 13, 6%, 20%, depending on the quarter. Now, the Windows OEM, which is the traditional Windows that we use, that is not growing much. You can see it was a negative 2% this quarter, and also Xbox content at a negative 6%. Now, that could be because of a slowing consumer. Consumers, because of rising inflation rates, rising prices, they're spending less on discretionary stuff, maybe like Xbox. Also, because the economy has opened back up again, we are out and about and doing things again, and we're not spending as much time on computers. We're not buying new hardware. We're not buying as much stuff. but this is still a very rosy picture. What I really liked about this earnings call, again, is what Satya Nadella said in terms of where he expects the cloud computing division to be in the future. Lots of 100 million plus deals and billion-dollar deals. That is a very good sign. Okay, so now you can see here, Microsoft's product-driven business process segment, including Office productivity, Dynamics, and LinkedIn, posted 16.6 billion in revenue. That was up 13%, slightly less than the street expectations. Now, I don't want to bore you with all this stuff, but the idea is simple. The idea is, why exactly are some businesses able to do really, really well and some businesses struggle? What it all boils down to many things, like how good is the management team? What are they doing to grow the business? And that's the things we want to look at. And this, to me, is a pretty good summation of what you want to look at. Now, you want to look at that, but also you want to look at, am I overpaying for this business? Okay. So what we do here at Theta is, once we come up with a game plan, say, hey, you know what? I think this business will be worth a lot more in the future. We do this based upon the earnings calls and the guidance that the company gives. And also, we get to understand the products and services of that company. So when we agree to buy it, the only difference is, what we do is we agree to buy it at a discount. Okay, so I want to just point you to this here. Microsoft currently is trading for $264.20, like I said. And if we just look at the 5-day here, you can see that big dip after the earnings announcements came in. And then after the rosy guidance, you can see the stock picked up very, very nicely. Okay, so that was what happened. And again, like I said, the stock picked up very nicely after the guidance. Okay. Didn't do so well after the first numbers came out. Oh, you missed on the bottom line, you missed on the top line. So now the stock is trading for $264 a share. We have two choices if we think it's going to be worth more in the future. Choice one, we can simply agree to buy Microsoft at the current price of $264. Great. Or what we can do, and what we do here at Theta, is we can use the options market, this one right here, and we can get paid a lot of money for guaranteeing a buy price on Microsoft. And the reason we don't mind guaranteeing a buy price on Microsoft is because we've already done our homework. We think it'll be worth more. We just went through that earnings call. We go through those things in very great detail. And that is what we do. So now let's take a look at to see how much we'd get paid if we agreed to buy Microsoft on or before August 19th. It doesn't say August 19th, but that is the date. Okay, August 19th of 2022. So Microsoft is trading for $264. We think it's going to be worth more in the future because of earnings, getting to know the company, their products and services, all things we talked about. And instead of buying it for $264, we're going to agree to buy it, which means we're going to guarantee a buy price of $255. For that, we're being paid $4.25 a share, just to guarantee a buy price $10 below the market price. Can you imagine that? Someone's going to pay us 1.5% per month just for guaranteeing a buy price. And the guaranteed buy price is the reason we're getting paid. We're saying, no matter what happens to the price of Microsoft, whether it goes down even further, I'm going to guarantee it at $255. But we've done our homework. We think it'll be worth a lot more. And as long as it stays above $255, we keep this $4.25. Even if it does go below $225 a share, we will have to buy it, no problem there, but we will also keep the $4.25 a share. Now that strategy is called a naked put. I've done previous videos on that. And there's another strategy that we can do if we have to wind up owning the shares. That is called the covered call strategy. If you want to take more look into that, please look at our previous YouTube videos. I think you'll find them very helpful. Anyways, guys, that's it for today for Microsoft. I hope you guys enjoyed it. Please hit that like button, subscribe button. And also, if you have some comments there, we're really trying to grow this channel. This is what gave me my financial freedom, understanding how to make money on my phone and then use that money to buy real estate. It was a life changer for me. I want to get as many people to know this as possible. So if you guys could share this with friends and family, and like I said, leave some comments on other topics you'd like to see. We're here to grow this channel. We're here to inform and educate. Until next time, Omar Khan from Theta Trading, guys. Take care.